Welcome back, and joining me now is Faheema Adia from Momentum Securities for a look into the day's trading session. Faheema, thanks so much for your time. I think it is the first time I see you this year, so happy new year. All right, so markets are continuing their plunge into the red on the back of Trump's tariff threats. The JSE, however, not doing so bad, really faring well as the flight for safety continues to boost those precious metal prices, in turn boosting our local miners and providing some comfort. Just your read on market action.
Good afternoon, Ntolang. Thanks for having me, and a happy new year to you too. Yes, I think it was quite a tough day today for markets globally, given these escalating tensions that we're seeing now between Europe and the US over Greenland. I think there's just jitters in the market that there could just be trade wars starting all over again. But yes, on a positive note, gold is still benefiting from that, seeing it at record highs. And that's been a buffer, I think, on our local JSE, keeping us in the green today.
And I also noticed that bond yields were moving in the same direction, with the Japanese 40-year government bond yield hitting a record high. Is this a cause of concern? You mentioned there that, those trade war concerns rearing their head yet again.
Yes, we've also been seeing a bit of an increase in the US government bond yields. I think European nations are taking action against the US in that way as well, by selling off more US treasuries. And of course, that becomes problematic for the US as it increases the cost of debt and has other longer term implications. So yes, it's just having a negative impact, I think, across all asset classes at the moment.
All right, let's take a look at what's playing out on the corporate side. Netflix doubling down its intentions to acquire Warner Brothers, offering an all-cash deal instead of a mixture of cash and shares. Is this enough to get Paramount off of Warner Brothers' back?
So it looks like Netflix has now made a cash bid for Warner Brothers Discovery, and it has been approved by the board of Warner Brothers Discovery. So they should be able to now acquire the HBO Max streaming business. The market was concerned, however, in the past that they may be overpaying for this deal, and that they will be putting themselves into further debt to do this. But they seem to be positive. I mean, the streaming business has, of course, become a lot more competitive over the past few years. You've seen a lot more entrants come into that space. So I think they did see it as see the strategic rationale of doing this. And then, of course, we do have them reporting results after US markets close later tonight.
I mean, they really are betting on that deal. There's even the breakup. I think it's the breakup costs that they are willing to take, which is what, close to $6 billion. Anyway, let's move over to what's playing out here at home. We had mining production surprising to the downside. Faheema, output falling 2.7%. This is the first decline we've seen since April 2025. A sector many have been watching, right? Because we've been talking about higher precious metal prices, higher industrial metal prices. But when we then look at operational costs, right, that really weighing on miners here at home, higher energy costs, a slow turnaround at Transnet, and aging mines all weighing on those miners. Just walk me through your analysis of that print and the kind of conditions local miners have had to weather.
So I think the main commodities that have been benefiting from this resource rally we've seen over the past year have, of course, been gold and PGMs. Because of course, gold's safe haven status. PGMs have pushed up because of, the introduction of now hybrid vehicles. There isn't as much of a push towards electric vehicles and so forth globally, now that Trump has done away with those incentives in the US. But if you look at some of the other metals in Ntolang, like the industrial metals such as iron ore, also looking at coal, those prices haven't actually performed as well. So I don't think there is as much incentive for those miners to ramp up production. And then, of course, the other factors you mentioned, is very high costs. If you look at the cost of electricity in particular, that's really impacted certain mining sectors like the ferrochrome industry, for example, if you look at Merafi's recent production update, I mean, it's down by more than 60% because of those high electricity prices. It's actually made a lot of these mining companies quite uncompetitive with countries like China that can produce at much lower costs. So there is, of course, that discussion now between NERSA and Eskom to try and reduce the electricity pricing, to try and keep those smelters and ferrochrome mines going again. I mean, to not just boost economic productivity, but also to save thousands of jobs. So I think that will be quite an important aspect in boosting mining production going forward.
Yeah, and one to watch. You mentioned there some of the industrial metals that haven't been doing quite well in terms of price. Iron ore, one of them. BHP, though, managing to deliver record production of iron ore, despite what we are seeing in the market when it comes to prices. Your take on that update?
Yes, it looked like quite a positive update. The copper production guidance for the full year was increased, which I think is quite positive, given that we are seeing the copper prices at all-time highs. But that was somewhat offset by the update on that Canadian Jansen Potash project that's expected to cost about 1 billion rand more than they initially expected. And then the other headwind that I noticed today was it was also refused permission to appeal against that ruling that it's liable for the 2015 collapse of that that dam in Brazil. So I think that is also a headwind going forward that we need to be mindful of, as the cost of that can run into billions of pounds.
All right, let's get your stock pick. Where are you seeing value at the moment?
So we're seeing value at the moment in Taiwan Semiconductor Manufacturing Company. It's quite well known for being the world's largest and most advanced chip manufacturing company, supplying some of the most prominent tech companies such as Apple, NVIDIA, Broadcom, and many others. What we like about it is it's now moving beyond being just a pure play foundry company and will be integrating the global AI semiconductor stack. And then if you look at its chips, it's also highly advanced. So that does provide a competitive advantage when it comes to dealing with competitors like Intel and Samsung that are also entering that foundry market, but their chips are, of course, not as efficient. Looking at the recent 4Q results, that was also quite positive. They beat market expectations, and we also saw several brokers upgrading the price targets and also the earnings on the back of that. And just looking at it from a valuation perspective, I think it's looking quite attractive on a forward PE of about 19.7 times. And we're expecting to see some meaningful upside on this one over the long term. Long-term earnings growth expectations is about 25%.
All right, let's leave it there. Faheema, thank you so much for your time and taking us through trade this evening. That was Faheema Adia from Momentum Securities.